We all want to build wealth, but, navigating the world of investing can feel overwhelming. What separates successful investors from the rest? In this video, we're going beyond the basics and tapping into the mindset and strategies of a CEO, someone who makes high-stakes financial decisions every day. Get ready to learn the secrets of smart investing and start building wealth like a pro. The foundation of smart investing, like effective leadership, starts with the right mindset. A CEO doesn't chase quick wins or get swayed by market hype. They adopt a long-term strategic perspective. This involves disciplined decision-making. CEOs rely on data and analysis, not emotions. They have a well-defined investment strategy and stick to it, even during market volatility. Risk management is key. They understand that risk is inherent in investing, but they manage it prudently. This means diversifying their portfolio, avoiding excessive leverage, and having a plan for potential downturns. Continuous learning is also crucial, since the financial world is constantly evolving. CEOs stay informed, read voraciously, and seek advice from experts. They're always learning and adapting their strategies. Long-term vision matters too. They focus on sustainable growth over the long haul, not short-term gains. This requires patience and the ability to see beyond current market fluctuations. And understanding the big picture is important. CEOs consider the broader economic context, industry trends, and global events that can impact their investments. Adopting this mindset is crucial for anyone who wants to achieve serious financial success. CEOs don't invest blindly. They conduct thorough due diligence, primarily through fundamental analysis. This involves evaluating the intrinsic value of an investment by examining several key factors. First, company financials. This includes analyzing the income statement, balance sheet, and cash flow statement to assess profitability, financial health, and cash generation. Key metrics include revenue growth, profit margins, debt-to-equity ratio, and free cash flow. Next, management quality. A company's leadership is critical. CEOs assess the experience, track record, and integrity of the management team. They also look for competitive advantage, searching for companies with a sustainable edge or what's called an economic moat that protects them from competitors. This could be a strong brand, proprietary technology, or a network effect. Industry analysis is another important step. Understanding the industry in which a company operates is essential, and this involves assessing the industry's growth prospects, competitive landscape, and regulatory environment. Finally, valuation. Determining the intrinsic value of a company and comparing it to its current market price. CEOs look for undervalued opportunities with a margin of safety. By mastering these fundamental analysis techniques, you can make informed investment decisions based on a company's true worth, rather than market sentiment. CEOs understand that diversification is key to managing risk. They don't put all their eggs in one basket. A well-diversified portfolio typically includes stocks, which are investments in different companies across various sectors. It also includes bonds, debt securities issued by governments or corporations providing stability and income. Real estate is another component, offering both income and appreciation through property investments. There are also alternative investments, like private equity, hedge funds, or commodities, which can offer the potential for higher returns, but, also come with higher risk. International investments are important too, as diversifying across different countries and regions helps reduce exposure to any single economy. The goal is to create a portfolio that can weather market fluctuations and provide consistent returns over the long term. CEOs regularly review and rebalance their portfolios to maintain their desired asset allocation. Today's CEOs have access to a wealth of data and powerful technology to inform their investment decisions. This includes financial data platforms, tools like Bloomberg Terminal, Refinitiv, and Yahoo Finance, that provide real-time market data, company financials, and research reports. Advanced charting software helps analyze price trends, identify patterns, and make informed trading decisions. AI and machine learning are honestly increasingly used to analyze vast amounts of data, identify investment opportunities, and predict market movements. Portfolio management software helps track portfolio performance, monitor asset allocation, and manage risk. By leveraging these tools, you can gain a significant edge in the market and make more informed investment decisions. One of the most important qualities of a successful CEO investor is patience. They understand that building wealth is a marathon, not a sprint. This means avoiding market timing. CEOs don't try to predict short-term market movements or time their entry and exit points. Instead, they focus on long-term trends and invest consistently. They also ride out volatility, knowing that market downturns are just a natural part of the investment cycle. They don't panic sell during these periods, but instead see them as opportunities to buy quality assets at lower prices. Plus, they recognize the power of compounding, where returns generate further returns over time. This really requires a long-term perspective and the discipline to let your investments grow. Patience and a long-term outlook are absolutely essential for achieving significant wealth accumulation. Even the most successful CEOs don't operate in a vacuum. They understand the value of seeking expert advice and honestly, continuously expanding their knowledge. Consulting with qualified financial advisors can provide valuable insights, help develop a personalized investment strategy, and ensure that your portfolio aligns with your financial goals. Staying up to date on industry trends, economic forecasts, and regulatory changes is crucial for making informed investment decisions. And of course, continuously learning about investing through books, courses, seminars, and reputable financial publications is essential for improving your investment skills and staying ahead of the curve. The best investors are lifelong learners who are always seeking to improve their knowledge and understanding of the financial markets. Investing like a CEO isn't about luck or speculation. It's about adopting a strategic mindset, conducting thorough research, managing risk effectively, and maintaining a long-term perspective. By embracing these principles, leveraging data and technology, and continuously learning, you can significantly increase your chances of building substantial wealth and achieving your financial goals. Start applying these strategies today and take control of your financial future. And hey, subscribe for more insights on smart investing and wealth creation.